He's known as the godfather of Wall Street, the author of the book Security Analysis that laid the global market. The most famous student of his is the stock god Warren Buffett. His name is Benjamin Graham. Do you know how he made his bucket of gold? Livermore is a genius of day trading. However, in terms of the profound impact on the market and the inevitable contribution of theoretical analysis, Benjamin Graham is the most important person. Graham is not only the founder of the School of Financial Analysis, but also the pioneer of the value investment concept. In the book The Great Game, the famous American economic historian John Gordon commented that the emergence of Graham transformed the investment from witchcraft into science, from a ghostly charm to a scientific analysis of company assets. Graham's achievements and contributions in the field of financial analysis, just like a vibrant seed from a chaotic to the scientific analysis and valuation of securities, inspired a whole generation of Wall Street investors. The impact is still huge, making him known as the godfather of Wall Street. His most famous student is the current world's richest person, Warren Buffett. Of course, he's also a multimillionaire of that era. Then how did he earn his first bucket of gold? Any successful person starts with a different childhood, meaning that success is similar, but each has a different childhood. Many of Graham's theories were influenced by his experience during his formative years. Graham's family immigrated to the United States when he was 1 year old, and as a child, he had a very privileged life, with a maid, a celebrity chef, and a French housekeeper, and a home on Fifth Avenue North. All good things came to an abrupt end at the age of 9. With the death of his father, Graham's life fell apart thereafter. Even greater misfortune was that as Graham's mother sold her large house to make money and leveraged up to trade stocks on margin in an attempt to turn a profit with the market boom of early 1907. The result was predictable. In October of that year, a serious financial crisis broke out in the United States, and US stocks plunged by 50%. Livermore was relying on this round of shorting US stocks to become the king of the market, but Graham's mother was blacklisted for bankruptcy. Graham witnessed how his mother sold her house, took out a loan, leveraged all into margin to buy stocks, and eventually went bankrupt when the bear market came. This experience allowed Graham to establish two important rules of investing that are revered by Warren Buffett. First, never lose money. Second, never forget the first. It also formed Graham's tendency to be almost demanding in risk control. What will he do next to establish a career in securities investment analysis and theoretical research? Graham worked hard and got admission to Columbia University twice, which is much better than his student Warren Buffett. During his time at the university, he enjoyed subjects like history and literature and mathematics. In only 2.5 years, he graduated from Columbia University with honors and second place in his class. 3 departments at Columbia made him offers to stay and teach, but Graham bent on making money and declined. He was the luckiest one to enter Wall Street and join Neuberger, Henderson, Loeb, and New York brokerage firm on the recommendation of the school president. At the time, the mainstream investment approach was bonds, and stocks were considered gambling and a vehicle for speculation. Although Graham's entire career revolved around bonds, he had a passion and affirmation for stocks, which was not common at the time. Many industrial companies in the United States developed financially well after World War I. Unlike the statistical data analysis of publicly traded companies in those days, Graham focused on the impact of the intrinsic value of companies on stock prices to engage in security analysis. Thereafter, he delved into statistics research and analysis of the impact of the intrinsic value of enterprises on stock prices, forming a real thorough research and scientific analysis of the value of securities and influencing later generations to this day. He inadvertently stepped into a virgin territory of Wall Street that had never been tiled. Graham's later achievements in theoretical analysis and equity research were inseparable from his college interests in literature, history, and mathematics. These interests outside of investing eventually forged his historic place in the world of equity investing. So could his theoretical system withstand the test of the market? Graham was headhunted after entering the company for less than 3 months. The company refused to let him go and quickly promoted Graham to the research report writer. Due to his sufficiency literature complement, rigorous scientific thinking and profound knowledge, he soon formed his own concise and logical investment report showing his uniqueness among Wall Street security analysis. It was from the company's stock price's intrinsic value impact analysis that Graham, with the advantage of his rigorous mathematical logic, discovered the act of asset and profits concealment by a large number of listed companies. The purpose of these listed companies to conceal the company's asset by all means is to avoid liability when the bonds are liquidated. These undervalued assets are enabled to appear in the listed company's financial statements, which means that the stock price is often lower than the actual value of the listed company. The stock market at the time was operating in such a chaotic, disorganized, heavily speculative, and even fraudulent state. In September 1915, he formally suggested to the company's founder, Mr. Neuberger, that they should buy a company called Guggenheim Exploration Company. After several analyses, he found that it was a mining development company which held large interest in numerous copper mines, and after collecting and analyzing information through various channels, he found that the total market value of the shares held in this about-to-be-dissolved company was much higher than the company's share price. Mr. Newberg took Graham's advice and bought a lot of the company's stock, which was then trading at $16.88 a share. A year and a half later, in January 1917, Guggenheim announced the dissolution of the company. Mr. Newberg earned hundreds of thousands of dollars in profits from the sale, with a return on the investment of nearly 20% gain. This battle made Graham and his value investment analysis rise to fame. Wall Street was aware of the analyst named Graham who could make money by analyzing earning reports. Will Graham be able to fight more courageously in Livermore and dominate the world? Graham became a partner in the firm in just 6 short years, and during his tenure as a partner, not only he learned about the operations and management of the entire firm, but his framework for equity investment analysis and value investing philosophy also began to take shape. Graham decided to try these ideas and methods of his own. He got a lot of investment from his relatives and friends. Without careful analysis and not listening to people's recommendation, he then decided to invest in a company called Savoy Tire. When the company's stock was about to go public, Graham bought the original shares. Graham sat back, waited for the dream of getting rich came true, not realizing that this stock subscription was purely an act of market manipulation and fraud. Eventually, the company failed to list and all the funds Graham invested were lost. He then concluded to 2 points. First is not to believe in the so-called inside news, and second is to maintain a high degree of vigilance against market artificial manipulation. Next, how Graham would recoup his losses, stop the investment before it went worse. Graham left the company and decided to set up his own business. He set up the Graham Corporation with 500,000 USD funds management size. The 500,000 in 1923 is now a large fund worth of tens of billions. This time he was a lot more cautious, starting from the value investment analysis that he was familiar with for market analysis, as soon as he selected the American arms giant DuPont for the first attempt. The company took advantage of the plight of General Motors, which could not pay its bank loans, and successfully acquired it using a long-standing plan. After World War I, in the arms of trade, it plummeted. DuPont's stock price was only $297.85 at the time, while the General Motors stock price was at $385. Graham bought DuPont stocks and shorted General Motors stock. Just 2 weeks after Graham sealed the deal, the stock market began to play in its own price error correction a trend. DuPont's stock price climbed all the way to $365.89 US, while General Motors fell back to $370 US. Graham's long DuPont alone yielded a 23% return. Would Graham have more success stories and achievements next? Would his value investing analysis theories and concepts be carried forward? Graham's theories and ideas of value investment analysis were refined and validated in practice, and after analyzing the financial data and operating model of the government employees insurance company, he was tasked with the company's situation, which was extremely consistent with his investment philosophy. First, the company was in excellent financial condition with rapid growth in profits and earnings per share of $1.29 in 1946. And Graham eventually purchased half of the shares held by the Rear family, or 1,500 shares, for $475 per share, totaling about $720,000. He not only became a shareholder but also personally served as a chairman of the board to promote the company's IPO. A few years later, the government employee insurance company grew into a huge $100 million capitalization company, and by 1966, investors' returns were more than 10 times, with Graham's personal holdings reaching more than $10 million. At this time, Wall Street was still in an upward trend, and would Graham take his chances to create an even greater glory? Graham's entire investment career, although also bankrupt and extravagant life, he was always able to save in time and re-emerge, after self-reflection, to live a normal life. Compared to Livermore and John and other masters of suicide to end their lives, Graham announced the dissolution of the company after 42 years of struggle on Wall Street, chose to start teaching at the University of California, and good end to get the respect of the world. Graham's passing has not diminished his influence on Wall Street, and his efforts and wisdom to create the theory of securities analysis have influenced generations of investors. He trained many disciples, such as Warren Buffett, who rose to prominence on Wall Street. He was the creator of the investment gurus, and the key is Graham's ideas and the doctrine of security analysis, which is celebrated to this day, and it's still in the process of being carried forward. Countless graduates with financial dreams have extracted nutrition from studying Graham's books to kill the workplace. Graham's classics is still being sung, so let's end today with a poem that he released on his 80th birthday. Come, my friends, 'tis not too late to seek a newer world. Push off and sitting will in order's might. The sounding furrows for my purpose holds, to sail beyond to the sunset and the bars of all the western stars until I die. It may be that the gulfs will wash us down, it may be shall touch the happy isles, and see the greater Achilles whom we knew. Though much is taken, much abides, and though we are not, now that strength which in all days moved earth and heaven, that which we are, on equal temper of heroic hearts, made weak by time and fate, but strong in will, to strive, to seek, to find, not to yield.
For more information, don't forget to subscribe our channel.